If you don't have a broker and you'd like to speak to someone, I'd love to talk to you. My name is Lindsay. My phone number will be in the description. And I've been in finance for over 30 years. I've done everything from wealth management to collection, so I know a thing or two.
Today, I'm going to show you how to get approved for a mortgage quickly. Buying a home can be stressful, but getting a mortgage does not have to be. In this video, I'm going to walk you through the process and share some tips on how to get the best mortgage based on your circumstances. Watch to the end because I'll be debunking some myths related to mortgages that usually come about from well-intentioned people that don't do this for a living. My name is Lindsay, and I've been in finance for over 30 years, so I know a thing or two. Remember, when you're taking out a mortgage, it is a huge loan and a huge responsibility. So make sure that you consider it because your home may be repossessed if you do not keep up your repayments on your mortgage. Now, first things first, make sure that when you meet with your broker or speak to your bank that you're open and honest. The fact is that everybody that is doing a mortgage for you can probably place you with a lender if they have the information. If you hide things from them, it won't help you. So make sure that you're open and honest. And to be honest, you shouldn't be dealing with someone that you don't feel that you can be honest with. Now, what you're going to want to do is be prepared. In most cases, this is what you need in order to get a mortgage application completed. You're going to need 3 months bank statements. Now, those bank statements need to be the most recent 3 months. Also, if you have multiple accounts that you transfer money between, you'll need to provide all of those accounts because the bank needs to be able to understand how you manage your finances. And the key thing is they want to see that your salary is paid into the bank account that you're providing the statements for. So 3 months bank statements. You'll need 3 months pay slips. If you get paid weekly, then what you're going to want to do is provide weekly statements that add up to 3 months. And again, you want the most recent 3 months. You should also provide a P60 if you have access to one. You'll need to provide ID. This usually slows things up because when providing ID, if it's required, if you're not doing an online verification, you need to make sure that when you scan or take a photo of the identification document, that it's clear, there's no glare, all of the edges can be seen, usually with about 2 inches of white space around the document. Ideally, what you want to do is use a flatbed scanner, put the document on the scanner with a piece of A4 white sheet of paper behind it. That way the document can be captured correctly. So that's 3 months pay slips, 3 months bank statements, ID, and proof of address. So proof of address would be something like a utility bill. Some people will accept a driver's license, but most will not accept a mobile phone bill. And lastly, proof of your deposit. Not every broker and lender is going to need that up front, but it's good to be able to provide that, especially if you know that you're getting gifts and things of that nature, or things that might be problematic, like you're bringing money from outside of the country. All these things are permissible, but it's best if the broker or lender knows that in advance of completing the mortgage application. A few uncomfortable facts that some people may not know. 1, time kills deals. So if you're a buyer and you're delaying and you don't seem as if you're serious about the purchase, you could lose that property because the seller, in a lot of cases, wants to sell the property and they want to deal with someone who is serious, who is proactive, and has all of their ducks in a row. Buyers can be liars. This is what estate agents say. What they mean is, if you want to purchase a property at 280,000, you're usually going to say 250. So the estate agent in most cases is going to send you to look at properties at the top of what you say your range is. So if you say 250 to 290, they'll ignore the 250 part and show you properties usually at around 300,000. 50% of deals will fall through. So keep in mind the buyer or the seller can pretty much pull out at any point until the end of the process. So if you're serious, you want to move quickly, you want to deal with a broker and a solicitor that is serious in moving your deal forward quickly, because the deal will only be as fast as the slowest person. Pounds are not percentages. Now, a pound amount that you have towards a purchase is a static amount. A percentage is not. What I mean by that, when your broker asks you how much you have for a deposit, don't say 5% or 10% or 15%. Say how much you have in pounds. Here are the key stages of purchasing a property. The first step is to meet with a broker. Have a conversation with a broker. Why a broker? Because brokers deal with more than one lender. If you go directly to your bank, what will happen is they can only talk about their products and services. So they may offer you the very best rate they have, but it doesn't mean that that's the very best rate for you. Once that initial assessment has been done, you're going to need an agreement in principle, sometimes called a decision in principle. Keep in mind, this is not a mortgage offer. It's not a contract. It's just basically saying, based on this cursory information that we have about the client that we haven't yet verified, this is what we will lend. Now, I try to make sure that every agreement in principle that I produce for a client will convert into a mortgage offer, which is why I do a lot of work and I check all of the details, speak to business development managers to make sure that what we're giving you as an agreement in principle is a true reflection of what we'll be able to get for you. Once you have the agreement in principle, you can search for a property with the confidence of knowing that you can borrow the money based on what the agreement in principle says. Once you've found the property, you'll negotiate with the seller, you'll come up with an agreement, and they'll accept your offer. And at that point, you're now converting the agreement in principle into a mortgage offer. So think about it this way. The agreement in principle is about you and your profile as a borrower. However, the mortgage offer is about you and the property. So I've seen it time and time again where someone has a mortgage offer, they're an excellent client, they go after a property that may be problematic, and the lender might come back and say, we won't lend against that property. That doesn't mean you're being declined. It just means that property may have non-standard construction, or that lender may have a high exposure in the area that you're looking to get the mortgage. This is why a mortgage broker is worth their weight in gold, because they'll have a backup plan for you. Once that offer is done, and as part of that process, they'll do a valuation. And keep in mind, it's a valuation, not a survey. The valuation is where the bank says, this is how much we think that this property is worth, and therefore this is how much we will do a mortgage for based on our assessment of the value of that property. I've done another video on how to navigate if the bank comes back and says that they don't agree with the price that you're purchasing the property for. So make sure you check the link and look at some of the other videos. But let's just say everything's fine. They come back, they say, yep, we're happy with that. That's when the legal work is going to start. Well, not actually start, but that's when it will keep moving. This is why I always recommend a solicitor from the early stages. Now, you don't have to work with my solicitor, but I will find you a solicitor who the bank will work with, because not every bank works with every solicitor. So using your cousin or your friend or your friend's friend may not be a good fit. And do keep in mind, don't cut corners on your solicitor. It can end up costing you a lot more in the long run. So these are the key stages. So once you get to that point where you've got the mortgage offer, the legals have started, the next stage will be exchange of contract and then completion and move in, which is what you really want. Current timelines are about 6 months, 4 to 6 months. Now, obviously, if you're buying from an auction, it's a lot quicker, but do keep in mind it can fall through at any time. Things can go wrong and things can get delayed. Rates might change, your mortgage offer might expire. This is why you want to be working with a broker who's responsive and stays on top of things. Now, here's some great tips on how to get the best mortgage deal based on your circumstances. Move your savings or the deposit into a high rate savings account if you can. Why not earn some interest on this big lump sum of money while you're waiting to pay down on the property? Because you don't pay the deposit until towards the end of the process. So this is a good way to generate or offset some of the costs. Now, I'm not giving accounting advice because I'm not an accountant. However, this is something to consider. Make sure that you do your due diligence. Clean up anything that you might be paying out on that you don't need. If you have small credit cards that you can pay off the balance, and do not apply for any additional credit while you are trying to get your mortgage. I've seen it happen where I've gotten someone approved and then they go out and take out a £15,000 loan. And then that can mean that the lender looks at the mortgage as no longer affordable. So you don't want to do that. You want to maintain a steady job. Starting a new job or ending a job or not working throughout the process can cause your mortgage offer to be revoked. Avoid taking out new debts, as I said, and always avoid payday loans. Now, this is the part that I was saying about debunking myths. There's a lot of myths out there about mortgages, and they're usually from well-intentioned people that don't do this for a living. So what I mean is you might have a friend or an uncle or someone that has a mortgage and therefore think they understand completely how mortgages work. Now, if they're not doing it every day, they may understand some of the fundamentals, but not everything. Now, the first myth is the percentage down myth. Now, what I mean by that is a lot of people will talk about a 5% deposit or a 10% deposit. Do keep in mind, not everybody will qualify for a percentage down. So you want to know what your circumstances are. So for example, if you are on a skilled worker visa, you may not qualify for a 5% deposit. Whereas if you had a UK, you had a UK passport with everything else being the same, maybe you could get a 5% deposit mortgage. The other one is, I can't get a mortgage. This really frustrates me, hearing young people or people to say, I can't get a mortgage, it's generation rent. In most cases, people can get a mortgage. It may just be that they can't get the amount that they need. It might sound like there's no big difference there, but there really is, because you can get a mortgage, but maybe you need to stay and save a little bit more money, but you can get a mortgage. Not being able to get a mortgage is different than not being able to get the amount that you want, because this may mean if you're in London, maybe you're looking in zone 1, 2, or 3. Maybe if you expand your search to zone 4, you can now get a house or a property within your affordability. So don't just say you can't get a mortgage unless you've actually talked to a mortgage broker, gone through everything, and they've come back and said you can't get a mortgage. The other one is credit issues. If you have credit issues, you can still get a mortgage. I'll say it again. If you've had credit issues, you can still get a mortgage. It just means that you'll probably have to go to a specialist lender, which in a lot of cases means that the interest rate will be higher and there may be some fees. However, if you are really determined to get your mortgage now and those credit issues are behind you and you need to move forward now, a broker can get you a mortgage. And if you pay that mortgage well, it may mean that when you remortgage, you can then go with a mainstream lender. And here's some guidance. If you just want to know a quick way of how to calculate what kind of mortgage you'll be able to get, let's look at affordability and income multipliers. First thing, affordability. That's about how much you have after you've paid all your bills and all of your expenses, how much you have left towards a mortgage repayment. The income multiplier and the income multiplier myth is people say, oh, well, it's 4.5 times your salary. That's not always true. For certain professions, it may be higher. For certain professions, it may be lower. But at the end of the day, it doesn't matter what somebody else qualifies for. It's what you qualify for. This is why you want to sit down with a professional, go through your information, explain what you're trying to accomplish, that someone can do a mortgage illustration based on your circumstances. So what are the next steps? Next step is to get an agreement in principle. A lot of people do it backwards. They'll go out and find a property and then make an offer if the estate agent lets them do that without an agreement in principle. And then they go to a broker. I would always recommend go to a broker, get an agreement in principle first, and then do your property search based on what you know a bank will lend you. So you'll get an agreement in principle, start looking for a property, and don't forget, if you need a mortgage, I'm here. I try to provide information and talk people through the process because not everybody understands it. And I don't want you getting the information from some guy on social media who has no qualifications. I'd rather give you information that you can do your due diligence. And if you're in the UK and you need a mortgage, my information is in the description. And thanks for watching. My name is Anthony Lindsay, and I have been in finance for over 30 years, so I know a thing or two.
If you don't have a broker and you'd like to speak to someone, I'd love to talk to you. My name is Anthony Lindsay. My phone number will be in the description, and I've been in finance for over 30